In the weekend video, I want to take a look at some markets that have broken out and a few that have the potential to break out here in the near future. So I'm going to start with the stock market. Coming out of the recession last year, central banks everywhere started printing trillions of currency units. That's powered. That was our slingshot move out of the bottom. I think we're in the middle of a bubble phase here, and I think the tech especially is consolidating and preparing for probably the final leg up, but I don't think it's quite ready yet. So you can see this first leg out of the bottom of the slingshot. Price stretched quite a long ways above this 200-day moving average, and then it had to go through a consolidation period for a couple of months where it chopped sideways, and then we got our second leg up, and now we're stuck in another consolidation here at roughly 14,000. The Nasdaq managed to get a little above it twice, but couldn't produce a sustained move. This this move here in this second leg up, of course, occurred way too late in the intermediate cycle to get a sustained move above that. And then now we're in a new intermediate cycle, and it appears that this intermediate cycle is going to be mostly a sideways affair. To consolidate this second leg up, allow the 200-day moving average, which price had gotten stretched extremely far above it at this point here. This intermediate cycle, this consolidation phase, is allowing the 200-day moving average some time to catch up to price. So I think we finished our half cycle low here. As I've noted before, the FOMC meeting is in a week and a half. The Fed doesn't generally allow the market to correct ahead of those FOMC meetings, so they're going to probably flood the market with liquidity over the next week and a half. That'll probably give us another test of this 14,000 to 14.2 level, but I doubt that we're going to get a sustained breakout. We may get a marginal move back above this high, like this was a marginal move above this peak, but it's now getting late in this intermediate cycle, and breakouts that occur late in an intermediate cycle don't tend to produce sustained moves. So I think this entire intermediate cycle, this was the intermediate bottom, is going to unfold as more or less a sideways churn, allowing this 200-day moving average to catch up to price a little more. So, you know, I think you've got I think you've got potential here for the next week and a half to get back up to 14,000 or a little above, but I would not assume that any marginal breakout above this peak is going to produce a sustained move. I think it's still too early, and I think this entire intermediate cycle is going to be a sideways affair, and the buying opportunity is going to come at the next intermediate cycle low, probably end of June or early August, and it might come with a retest of this 200-day moving average at some point around that time zone, and then that's the next intermediate cycle. I think is where we can get our breakout above 14,000 and get the final melt up phase in this bull market and complete the bubble. All right, moving on to oil. We do have a breakout in progress in oil. So this second leg up out of this was a bear market, a final bear market bottom. So we're in a new secular bull market, and I think this probably has 4 to 5 years to run. So this is we're still very early in the in the bull market. This leg up managed to test this resistance zone here at about $66, pulled back from that. Our first daily cycle tested it again. We had multiple tests here, and then we dropped back down into a daily cycle low in oil. And when a resistance zone gets tested multiple times, if you knock on the door enough times, eventually the door is going to open. That's what happened this week, and we're getting a successful breakout uh, uh, of this resistance zone in oil. It's occurring very early in the daily cycle, so this is probably going to continue to produce a sustained move. And before this intermediate cycle tops, and this was the intermediate cycle bottom right here, it's not out of the question that oil could come back down and retest this um, resistance zone as support and then continue higher. But I think this intermediate cycle is going to at least test this resistance zone here at about $76, $77 before the intermediate cycle tops and we get another intermediate degree correction. So sustained breakout in progress in energy. Now moving on to gold, I think we've got a cup and handle basing pattern here. This is the cup. This was the handle, and I think we're done with the handle. I think we're starting the next leg up in the secular bull market. All right, so this is what I think is the handle in that cup and handle pattern. You can see gold is broken through that downtrend line, so that convinces me that the handle part of the consolidation is done. We're starting the next leg up. The question is just whether or not the daily cycle low that gold was dropping into completed Friday morning ahead of the employment report, and it's a little too early for me to say for sure, but I tend to think it did. The employment report is a potential trigger event for the cycle to bottom. Gold came down to at least this, close to this 1850-ish support. This would have been support here. This was resistance where the cartel tried really hard to turn gold back down and prevent that breakout from the above this trend line, but eventually they lost that battle, and the squeeze that started here when they lost the battle at 1800, that squeeze continued. So the banking cartel, they've been caught in a short squeeze in gold ever since they lost this battle at 1800. It's produced a pretty a fairly powerful move and breakout above the trend line. And then now the question is just whether or not that daily cycle low ended early Friday morning. And there are a few signs that suggest that maybe it did. This seems like an awful big reversal candle. If that I would not expect if this daily cycle low is going to go deeper. If I switch over to the weekly chart, you can see this is the 50-week moving average, and this has been a pretty solid support level. Once this was broken back in 2018 as we came out of that bottom, this held support during this intermediate cycle low. It held support during this intermediate cycle low. It held support at that intermediate cycle low, and then that support gave way as the handle consolidation continued. And acted as resistance here, and then once this broke, it looks like it is going to act as support again during this daily cycle low. So I'm a little bit on the fence, but it looks to me like that may be all we're going to get for the move down into the daily cycle low in gold a little bit um, milder than I was expecting, but most of the parameters have been hit that I look for at a daily cycle low. So that may very well may be all there's going to be, and we're just starting a very powerful phase as we break out of this handle. And remember, for weeks and weeks, if not a month or more, I've been saying that I think once we get done with this daily cycle low, the next daily cycle is going to be where the real momentum is in the metals. And this is the breakout that I'm really interested in, is in silver, because this thing has been consolidating sideways since August of last year, going on 10 months now. And once silver breaks out above this $30 resistance, then I think it's going to go to $50. So if that's all we're going to get for this daily cycle low, then silver is set up to rally quickly and test this $30 level early in the next daily cycle. And as I've noted, breakouts that occur early in a cycle tend to produce sustained moves. So this is setting up to where if silver can get some traction early next week and move above this cycle peak and then test this $30 level, we're probably likely to have a small little pullback from that $30 level. But then I think the next test is going to go through that, and once that resistance is broken with a consolidation this big, the floodgates are going to open, and I think silver is going to be it's going to produce an extremely strong trend that's probably going to take us to $50 sometime in the next couple of months. So silver, I think, is where the real big momentum is going to be, and that's the market you want to be in. The only question now is whether or not this daily cycle bottomed Friday morning, and we're getting ready to start the advancing phase of the third daily cycle, or whether or not we still got another day or two lower to go in the metals before that starts. But either way, at this point, whether or not you're a day or two early, I don't think makes any difference, because I think the ultimate target's going to be at least $40 and probably $50 sometime in the next 2 months. So being a day or two early isn't really that much of a consideration when you figure, when you factor in where the final top is going to be.